Welcome to Terra Talks, where we talk about all things real estate. In each episode, we'll tackle current trends and topics of interest, both locally and regionally. However or wherever you decide to tune in, you're not going to want to miss this.
Hi everyone, joining me today is Sherryann Bourne of RBC. She is a private banker for the... Should I start over? Okay, private banker for RBC. Let's just try and not change things up. Okay, back to the start. Hi everyone, joining me today is Sherryann Bourne, private banker for RBC. Sherryann works with every agent on the island, and we do work with other banks as well, but Sherryann's my favorite, and I'm hers as well, right? So Sherryann's going to give us a bit of insights on financing in Barbados, and so we're going to run through a number of questions, and the first one up today is, what's a common misconception about financing?
I think that it's complex.
Really?
I think, people try to make it seem as if it's complex, but it really isn't. Your income, your expenses. You have to kind of analyze that and determine what you could afford. It's not, it's pretty straightforward.
Got it. So what's the process like to approve local financing?
When it comes to local financing, what we tend to look at, it depends. Everybody's always broken up into two different categories. Either you're salaried or you're self-employed. So if you're salaried, we look at job letters, pay slips. You look at your deposits for the salary. We do the local credit bureau report. We analyze that, we compare it, we basically ensure that the monthly payment for the mortgage that you're going for is all within 40% of your gross salary.
Got it.
If it's self-employed now, then it's going to get a little bit more complex because we're going to be looking at your financial statements. We're going to look at the health of the company. So you want to see company tax returns, you want personal tax returns. It just gets a little bit more complex, but the foundation is the same, income versus expenses.
Got it. So I guess everybody out there starts to ask this question all the time. Why does it take so long?
I think sometimes there is a misconception that it's taking long because the bank can only start once we've received everything from a client, right? And sometimes you find that clients don't submit everything, so then the process seems really longer than it needs to be because we can't do what we need to do unless we get everything from the client, right? At RBC, we boast that our turnaround times are pretty quick, especially in private banking. We tend to get back to clients within 3 to 5 business days.
Nice. That is fast.
Yeah.
But yeah, I was talking to someone the other day, and it's true. They say that sometimes the clients don't provide everything. But then on the other hand, I had a situation up to yesterday where a good friend of mine is getting financing, unfortunately not through you. And the mortgage broker said, oh, well, we're working from home. And all the notes are at home. Wow. So my notes at work. So can you please resend me blah, blah, blah.
Wow. No, definitely it's not something you would experience at RBC.
Okay, that's good to know. So how do you get the best interest rates?
You get the best interest rates, which all forms part of your terms and conditions for the mortgage by ensuring that your credit profile is acceptable.
Right.
So we're going to look at your credit rating, we're going to look at your liquidity, we're going to look at just how much debt you have currently. So if your TDS is low, then obviously you're low risk. Remember, the bank is a financial institution. We're in it, we're there to make funds, right? So we make our funds by interest expense. If you as a client prove to us that you're low risk, then obviously you can get lower interest rates.
Great, okay. So do you have any advice for first-time buyers?
I would advise that you really get to look at the expenses that are associated with getting a mortgage. And I think you've done a really good job, Rachel, in one of your write-ups where you kind of give an idea of the cost that's associated with getting a mortgage, which is like, you're looking at the legal fees, you're looking at the valuation reports, the fees for the bank. When you finally get into the house, you have land tax, you have insurance, you have the monthly payment. A lot of persons, sometimes they just focus on the monthly payment, but they don't really analyze all of the additional expenses. And then it gets overwhelming. and then it seems as like if it's something that they can't accomplish.
Agreed. There's actually an article that we did on that one that you mentioned. It's on terrared.com. But the cost for first-time buyers, you would think, most people think, okay, well, I'm going to buy a house for, say it's 300,000 US, so 600,000 Barbados. But when you really study it, what you need to outlay is not just the 10%, because you're thinking, cool, I have $30,000. But the reality is you need substantially more, because you have, as you said, the bank has a negotiation fee, which is 0.5%, that has to do with basically facilitating the entire loan, correct?
Yes.
There's a valuation cost at that could be around $750. This is US we're speaking. You have to pay stamp duty on your mortgage. So you always think the vendor pays stamp duty, but actually no, you need to pay that as well, which is 1%, and that's like $2,700. Then you have to pay for your attorney fees and the bank's attorney fees.
Yeah.
So that's a double whammy right there. And the best way to do that is to work with the same firm for both attorney, for both the bank and yourself, to get the cost down. And then you have to pay the proportionate amount of land tax that's left at the end of the year. And then you also have to pay insurance.
Yeah.
So by the time you thought that you were paying $30,000 down payment, it's actually close to $41,500 is what you're ending up paying. So
yeah, and that is dependent too on your mortgage amount.
Exactly.
Because I think your figures are dependent on a mortgage of about $270,000.
Yeah, exactly.
Right. Whereas if you go a little higher, and all of those expenses
creep up. Yeah, of course. So this is a good one, because no one ever told me this when I got my first mortgage. But what's the fastest way for our listeners out there to pay off your mortgage?
The first thing you have to do is you have to kind of review if the bank that you've chosen, if they have penalties for prepayment, right? I know with us, we normally give clients a certain percentage of the principal that they can pay without any penalties every year. So if you are able to do that, you can make principal payments towards your mortgage. In that way, the mortgage pays off quicker. Also at RBC, we offer different ways of repayments. So you can actually make your monthly payments every 2 weeks. When you do that, you actually pay back your mortgage a lot faster because you're paying less interest, so you're attacking more of the principal.
Got it. So we're going to segue a bit into the US dollar financing world, which you and I deal with quite a bit.
Yeah.
So what makes you a non-national? What does the bank say that is?
So non-national, non-resident. Under the central bank, it's someone who doesn't work and pay taxes in Barbados for at least a consecutive about 3 years, right? So anyone, like we have a number of clients who are coming on the 12-month welcome stamp, and this question comes up so frequently because they're here, they're living in Barbados, so they want to know why can I get the local terms and conditions, right? But they're still viewed as non-residents because they don't make their income from Barbados. They don't pay local taxes.
Perfect. So, can we pause a second? What the fuck is that noise? I think the AC is blowing on this thing, and it keeps on. Yeah, it's like
kind of clicking.
It's this thing down here. Should I just raise this or?
No, lower it more and see if it helps.
There we go. Now we can't click.
Yeah.
Everything's going okay so far?
Yeah.
Okay.
Yeah.
Cool.
So when you turn Jerry times, you just make sure that you buy the mic. I can still hear you.
Okay.
So it's less as like vocal as you were.
Okay, cool.
I'm staying close to the mic.
Sherryann's like, if you do it so low, if you mess it up, you do it on your own. Okay, cool.
So start that one over?
No. You want to start it over?
Yeah, because as soon as that no, sorry, I'm part of the as soon as that noise started, you literally gave like a, and then it was like a, so start that one over.
Okay. All right, Sherryann. So in the banking world, what makes you a non-national?
Okay, so non-national, non-resident, according to central bank regulations, which we are governed by, you're a non-resident when you are not paying local taxes for the last 3 consecutive years, right? So if you are under the welcome stamp, because we have a lot of those now, unfortunately, you're still viewed as non-resident if you're making your income overseas.
Got it.
Right?
Okay, so what are the major differences between local and US dollar financing?
Local financing is looked at more, and we're talking about mortgages, right? Which is like for residential homes, it's looked at as a residential mortgage. Whereas with a U.S. financing, majority of these people are coming to Barbados and they're buying second homes, right? Because it's like vacation homes. When they're not in it, they're renting it. So the structure of that type of mortgage is more of an investment mortgage. So with local, you get longer tenor. You get a maximum of 30 years. With the U.S. financing, you get 15 years, right? With local, you borrow in local dollars, whereas with U.S. financing, you have the option of buying in U.S. or Barbados dollars, right? So then if you do U.S., we do New York Prime. If you do local, we tie it to the local Prime. So that's the major differences, and then obviously the injection amount too. So for local, we have lower injection amount requirements, and then for the U.S., we have 35% for anything under $2 million and 50% for anything over $2 million U.S.
Great. And then one other question was, what's the minimum amount you lend on for U.S. dollar financing?
We don't have a minimum.
You don't have a minimum.
But obviously, it's within reason, because if you're doing U.S. financing and you're going to do a mortgage, then you still want the amount to make sense because you have to go through the legal process.
Got it.
Right?
All right. So how long do U.S. dollar mortgages take to approve? And sort of what's the process with that?
Right. So once we have everything from your client, we can normally get back to them within 3 to 5 business days. It depends on the complexity of the client. Salaried clients, a lot quicker. It's really straightforward. Self-employed, maybe a little bit more because you have that company assessment to do, right? Once we do that and we submit it and we get something called conditional approval, that means that the bank is comfortable with you as a borrower.
Sorry. Can you put your phone on silent?
Yeah,
it's yours.
Turn it off, please.
So I'm like, what is happening?
Yeah,
and I keep on like making faces every time it happens. I have to start over. Sorry.
Yeah. That's my work phone. You get it off? It's at the side.
Android.
Yeah.
Or just slide it down from the top, James, and put it on silent.
All right.
Probably a good idea.
I was coming down here. Nobody was calling me.
You're an important lady, sis.
Yeah.
Where's my loan?
Yep. All right. That's good.
Okay, cool.
So you got to start that question over again.
This one, yeah, I'm going to start from him. So how long do U.S. dollar mortgages take to approve, and what's the process for that?
Okay. So once we have everything we need from your client, normally we get back to them within 3 to 5 business days, right? Once we submit the application, there's something called conditional approval, where we basically tell you we are comfortable with you as a borrower. We now need to analyze the property that you've selected. So then we go and we do a valuation report. The QS, that valuation report can take anywhere between 5 to 10 business days. Once that comes in and it's submitted and there's a review and we're comfortable with the values and everything in the property, then we do something called final approval, which at that stage our commitment letter is issued.
Right.
Once the commitment letter is issued now, we move you over to the lawyers, right? And that's obviously now it's out of the bank's control, but we still kind of oversee it by ensuring that the lawyers will do what they're supposed to do so that the process can move slowly, as quickly as possible. No, 10 on the lawyers. But, and we've seen things close as quickly as 6 weeks and as much as 6 months. It really depends on the cooperation of the seller and the purchaser to ensure that they're here to sign documents and everything.
And obviously the 3 attorneys that are involved in the transaction.
Exactly.
Both for yourself, the bank, the client, and also the vendor.
Yes.
So 6 weeks is great though.
Yeah. Only seen it happen once though.
Yeah, I know. Actually, I have a sale right now that's closing in a month, but it's cash.
Yeah. No.
Which is, I haven't seen that in a while, but the clients were adamant and they're getting it done.
Nice.
Maybe they need financing after the fact. I'll pass them to you.
Thank you.
So can you use local? You touched on this a little bit, but talk more about it. Can you use local financing as a non-national?
Yes. When you say local financing, your loan can be in local dollars, right? This is seen more prevalent now since we've had the issue with the New York prime, right? Because we know the federal is kind of keep increasing it, because as of like last week, I think it went up to like 8%.
Yeah.
So it's crazy. So a lot of non-nationals now are looking at, can we use local funding, which obviously would be a lot cheaper, because like right now we have a campaign going where we're offering 4%.
Wow.
Right? So that's a big difference between the New York prime at 8%, right? Your monthly payment is going to see that difference, right? So to cut short, yes, you can, but it requires the support of the seller to accept Barbados dollars.
Of course.
Right? But the seller, once the seller had purchased, when they had purchased that property originally, had registered their funds, they can easily take the Barbados dollars and convert it into US dollars.
Yes.
So once both parties understand that they're not being disadvantaged, we're seeing more people actually embracing borrowing in local dollars.
The only main disadvantage might be the 2% foreign currency.
I'm not too sure. I will have to do more investigation, but I don't think that you get that on when you're registering. If you have registered the funds and you've gotten the ability to transfer it back into US, may just have to kind of figure out if that even applies in that instance.
So are there any creative ways for financing that we should be aware of?
When you said creative, talking legal.
Yeah, obviously. We're on a podcast.
So I would say that it depends, like in terms of if the client has a different means of supporting, like say for example, you may have a client who has a very good let's say investment portfolio, and they may want to use that to secure the loan. That's something that you can look at where you can get better interest rates, because obviously the security now is more liquid. When it comes to local, I can think about maybe putting a little bit more of an injection in. Another way too is that we do offer different ways of repaying mortgages. So on the private banking side, you can actually pay back interest only, or you can actually pay back like quarterly. You can make lump sum payments. So we do offer different ways of repaying based on how you make your income.
Got it. All right. So, and this one is for me. Just kidding. It's for everybody. Why don't banks offer fixed rates?
Well, banks do offer fixed rates, but it's usually for a term.
Yeah.
Right? So you will find that a bank will give you a fixed rate for maybe 1 to 3 years. Reason being is that banks also purchase money to be able to lend to you. So if the interest, like for example, what's going on right now with the New York prime, if the bank is lending in US, the bank needs to source US. If the interest rates are going up, then it means sourcing that US funds is going to cost a lot more for the bank, right? And I'm just trying to make it as layman as possible,
Yeah, of course.
right? So if I'm buying at a higher because the interest rates have gone up, then I have to lend to you at a higher, right? So by allowing fixed rates not to go for the life of the loan, it allows the bank then to tailor their interest rates to any changes in the market.
Got it. It's unfortunate. I'd like 3% for 15 years.
I think most people would, Rachel.
Okay, I know. I just had to ask. So what's the biggest mistake that customers make, in your opinion?
Number one, going and meet with you before knowing their pre-approved mortgage amount. Yes. Because they waste their time, your time. I think if they come to you after they've discussed with the bank what they can afford, then it allows them to go out there with a good purchasing power. They can focus on what they want. They can actually give, like when if you're selling a property and you want to give a bid, you know what you could offer. And then it basically makes the process faster too. So if I meet with you and I know that I have a pre-approved mortgage at X, once I find the property, I just have to bring back the property to the bank and the process starts.
Yes.
Now imagine you finding a property, and now you have to go and start the mortgage process. So I think that customers need to go out there more with pre-approved mortgages, knowing exactly what they can afford.
Yeah, and the difficulty is the market we have today is not the market we had 10 years ago. So if before people would say, oh, that house is on the market for a year, but now what we're seeing is if the property is priced correctly, within 2 months market exposure, the house has multiple offers on it.
Yeah.
So if you don't have your ducks in a row and you lose the house of your dreams, that's at you.
Yeah.
But I would never say that to somebody to their face after they've lost something, obviously, because I love all of my clients. But, we were talking about something once, and maybe you should raise it with everybody, because I found it was really insightful. Tell people about credit reports and when it's a good time to check that out for yourself.
It's a good time. I find clients, they expect the bank to be the first person to see the credit report, and that's a bad idea, right? You, in Barbados, you're entitled to one report every year, annually, free. And I tell everyone, whether you're going for a mortgage or a loan, you should know what your report says, because it's just like normal. There could be errors, and you don't want the bank, which you're trying to get the best terms and conditions, to be the first person to see those errors, right? And then on top of that too, it may take a while to solve the errors, because Chubby's is still out there.
Exactly. I was just going to say, for all the older listeners out there, I'm pretty sure I owe a video to Chubby's, and I do not know where they are, and I'm sorry about it. Please take it off my credit report.
Yep. So getting that report and fixing any problems that you can is, one of the things I always tell people. You need to know what's on your credit report.
I was talking to some bankers yesterday or the day before, and they were raising that sometimes, we were talking earlier about why things take so long, and that clients tell you that the bank hasn't got back to me as yet, the bank hasn't done this, the bank hasn't done that, when in reality, the bank has seen the credit report and they had a credit card outstanding for $40,000, but they didn't want to tell you because they're embarrassed, so they're blaming it on the bank.
Yeah.
So you guys get a bad rap, because of that. But
for sure, I find as a banker, remember our foundation is confidentiality.
Yeah.
Right. So a customer could come back to you and they can tell you whatever they want to say, right? But we know why we have this issue.
Yeah.
Right. That's one of the reasons why it's so important for me to have such good realtors to work with, because you guys know that I do my best to get loans approved.
Of
and
course.
if I can't get the loans approved, there's something wrong.
Yeah.
But I can't come and tell you, that client had a bad credit rating, or that client had a,
of course not.
so
that wouldn't be nice. No.
Exactly.
So, can we wink?
No.
Okay, sorry. All right. So, what's the best mortgage product on the market today?
I work for RBC.
Obviously. You're going to say that.
RBC. Actually, right now, we have a mortgage campaign going on, and it has some really good terms and conditions. There's money in there that can cover your valuation. I always tell people, too, I'm big on what's going on right now, because, when it comes to the inflation that you're seeing in the market right now, a lot of people are complaining about their dollars are not stretching. But one of the things that they're not doing is that they're not reviewing their existing credit. So if you have a mortgage on your book, which is probably the biggest expense that you have, shop around. See what other banks would offer you, because RBC is even covering switch costs now.
Right.
So if you can switch and you can save, then you can actually get some type of, relief in order to kind of live through these inflation periods right now.
Got it. So one more question. If you were to apply, here's what you need to do. You want to run that through with everyone?
First thing, you pull your credit report. You get that sorted. You feel good with it. You're good. All right. Next thing, you have to determine when you're looking at your income and your expenses, you yourself can do an analysis of what you think you're comfortable with, remembering that the bank's guidelines is 40% of your gross salary.
Right.
But I always tell clients, you don't have to go to the max of your 40%, right? So if your salary allows you a mortgage of $5,000, it doesn't mean that you have to go and go up $5,000. You know what your expenses are. You go with what you're comfortable with. Once you know that, you start gathering your information, because the good thing about it is that most banks require the same thing. I encourage clients to shop around. If you're doing a mortgage with one bank, most times you could also approach more than one bank to see the difference that the banks are offering, right? Be sure that you're okay with the bank that you've selected, because this bank now will have a relationship for the next 30 years with you. Of course. So if you're experiencing customer service problems, I have an Instagram page, And because I have so much followers there, I get emails all the time with, oh, my loans officer isn't responding to me, you know, oh, I'm not getting this bad, you know, like, I don't know if my terms are good, like, what's going on here? You have options. You know, that's the good thing about Barbados. You have options. And just because you bank with a bank doesn't mean you have to borrow with that bank too.
Correct.
Right? So I, you know, shop around, ensure that you've gotten your savings, you know what your expenses are, the deposit, the legal fees. You start to save for that. Most times when people are moving into homes, they also have to get additional expenses, like say furniture. Understand all of that cost. It's not a race. You know, you can take your time.
It's not a pair of shoes.
Yeah, exactly. It's a big decision, and it's something that lasts very long. And I always tell clients, you know, speak to your loans officer in your bank, get advice from them, and then manage your affairs in such a way that you have that goal to get, you know, it shouldn't be something that you do, like you just wake up in the morning and decide, I want a mortgage. Mortgages are not that, you know, easy.
Yeah, I gotcha. Perfect. So I would like to thank you for your time today, and I appreciate you coming in.
Yes, thank you.
And hopefully we can catch up on one of these again soon.
Yeah, for sure. And thanks, Rachel, for all the support you've given me over the years.
Anytime.
Yeah.
Always here. Thank you. All right.